Hello, I'm Sky Hackworth of Industry Insights, and I'm pleased to be with you today to share the latest insights from the Pool and Hot Tub Alliance's Quarterly Pulse Survey. Today, we're going to dive into the latest findings related to the builders and remodelers, service and maintenance professionals, and retailers in the industry. So let's go ahead and get started. We're going to start off by looking at the top challenges that companies told us that they're facing. Comparing what they told us last year to the start of this year, the same top items remain the top items. Economic factors such as inflation, consumer spending, maintaining profits, and then recruiting and retaining skilled employees. I do want to show that recruiting and retaining the employees fell from 58% of companies telling us that was one of their top concerns to now 45%. Could just be showing a little bit of easing in the difficulty of finding employees. So just could be. We'll be on the lookout for that. Looking at some of the economic conditions. So just covering some of the basics. Real GDP was 1.6% for the first quarter of this year. So that is healthy. It is a slowdown from the 3.4% that we saw in Q4. And so the back half of last year was very robust, very strong. It has softened, has eased a little bit, but still very healthy. Unemployment rate did tick up more so than the economists believed or expected, so reached 3.9%. For reference, anything below 4 is still full employment. So it's still a very, very strong job market, but hopefully we are seeing some things ease a little bit. We are, from other surveys and from wage pressures and some of that, we are seeing that there is some softening within the labor market. So we expect that unemployment rate is going to continue to slide upward, and hopefully we'll be able to see that for the good of companies here in the near future. And inflation has continued to fall and was 3.4% in April. And when we especially remove food and energy costs, we see that number has continued to slide considerably. And so inflation is moving in the right direction, still well above the Fed's target of 2%, but definitely moving in the right direction and continues to do so. Speaking of the Fed, they have maintained their effective rate at the somewhat elevated between 5.25% and 5.5%. And so they have decided to leave it unchanged. And so we were predicting initially that there would be 3 rate reductions this year. We've moved our prediction here at Industry Insights down to 1, maybe 1.5. So I guess 1, hoping for 2, and could be as early as September. So we had expected 1 in June. We no longer believe that's going to happen, and we're thinking now September could be a good time frame. Obviously, the Fed's going to continue to watch the data, and we'll see what happens. But we are optimistic that there will still be a rate reduction this year. And that obviously leads into housing permits. Right now, the market for housing is just very stubborn. So just the gap between the rates that homeowners have currently and what they would be incurring by moving is just too off-putting. So in addition, just the rates are high for new home builds, new builds for many, and so that has kept many out of the market. So hopefully with some rate reductions, we will see the housing permits start to pick back up. So let's look more specifically at the industry sales trends. Builders told us that they had some modest growth in Q1 of this year. So they're having a modest start, and they are having a very conservative approach to what their sales growth will be this year. We are thinking somewhere in the 1 to 5% based on the responses that we're seeing. And looking here, there is more orange, so more expectations for growth than for fall off, but very, very modest, pretty balanced. And so again, we are thinking somewhere in the 1 to 5%, 1 to 3% based on what business leaders have told us that they're expecting from the perspective of builders. Service and maintenance professionals, though, are more optimistic about the growth that they're expecting. So they're more in that 7 to 10% growth is what they're telling us that they're expecting for this year. As you can see from their growth expectations over the next 12 months, a lot more orange than blue. And so a lot of optimism. And so somewhere here in the 7 to 10, 6 to 10, 7 to 10% range is what we expect, is what they are telling us for this year. And retailers, along with the builders, they are more conservative. They've had a very modest 2023, and so they are more conservative with their expectations for 24. They did have a little bit of a boost in the start of the year, and so they're more in that 3 to 5% expectation range as well. Looking specifically at sales and backlogs, new pools. New pools were relatively steady last year, and so we saw some of that, and relatively steady to start the year. So pretty balanced between those who are seeing increases and decreases from a year ago. The backlog, however, has slid for many. So most builders currently have less in backlogs than they did a year ago. And so that's something to watch, but it is improving a little bit here, as we can see from the average lines. So there's a little bit of uptick here in the last couple quarters. So hopefully that will continue. Remodels, though, continue to be very, very strong. And so we're seeing a lot of growth there. From the remodels, a lot more orange than blue in terms of how they have picked up sales versus a year ago. And so, and also they have seen a resurgence in their backlog amount of jobs in backlog. So that shows that they picked up a lot of jobs here to start the year. And so now their backlog is larger than it was a year ago. They had seen some fall off in the back half of last year. So that has picked up, which is a good sign. Portable hot tubs, swim spas had a rough 2023. So overall, sales had dipped quite a bit. And so hopefully we're starting to see, even though it's not necessarily a rise for most, hopefully we are seeing some leveling off to the fall. So starting out this year, that's what we're starting to see, is a little bit of leveling off. The typical was here in the largely unchanged group, but we do still see that there's a little more fall off than there is growth. So, but hopefully, again, that is starting to level. And the backlog continues, I guess, kind of to rebound a little bit on average, or at least slow the fall. And we do see that a quarter told us that they have more in backlog than they did a year ago. So again, a little bit of good sign, a little bit of optimism there for that group. So just some closing thoughts. The economy is still strong. Things are going well. Employment levels are hopefully starting to soften and ease a little bit. Some of that tension. Inflation is easing as well, so hopefully that'll continue. And Q1 is off to a good start for most of the industry. Builders and remodelers saw just a modest uptick, and their expectations are modest for the year ahead. Remodel jobs continue to be what fuels much for the builders, and retailers are also feeling a little bit better about this year than they were last year. So that's good as well. And service companies are very optimistic, especially the smaller ones who have been in business a little less time and are able to see more rapid growth. So very optimistic and expect a really good year here ahead. So I just want to thank you for joining me for this update based on the Q1 of this year. And for more detailed information, please visit PHTA's website. They have all the information about their studies and the various research opportunities that are available for you to look at and to understand the industry better. Please be on the lookout for the next Pulse survey, which will become available in July. And it's always a pleasure analyzing and being part of this industry. And just want to thank you and wish you a great day.